Hi traders, and welcome to my video on the high-low indicator. This is an indicator that I'm using in the MT4 trading platform that can help you capture some big market trends. So here I have a dollar franc 1 hour chart. As I said, I'm using the MT4 platform and I have the high-low indicator displayed on the chart here. Okay, this particular high-low indicator I downloaded free online. Okay, it has an option to display the weekly highs, daily highs, and monthly highs. Okay, and also the option to display the highs on your current time frame. But of course, you can just look at the candles to tell you that anyway, regardless. Okay, that being said, there are various ways in which you can interpret the data provided by the indicator. So I'm just going to run through how I would. Okay. So the first thing I'm going to do is I'm going to look for the direction of the trend. As we can see here, support level and an uptrend. Okay, this is a 1 hour chart. I prefer the higher chart time frames, 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find the signals tend to be more reliable. Okay, and you can use this indicator on any chart time frame that you wish. And any trading instrument as well, Forex, cryptos, commodity stocks, indices, etc. So the way that I would implement the indicator is I'd first look for the trend direction. As I said, an uptrend here, clear from the higher lows the market's making, the bounce away from the support level here. In fact, I would have considered trading as far back as here on this trend, simply because there's price consolidation here. Okay, you can see a strong consolidation. Triple bottom candlestick pattern where the support level has been tested at least 3 times, 1, 2, 3. And then a nice turn to the upside. You can see that is an NFP, non-farmers payroll, first Friday of the month candle, hence that big move like that can happen. First Friday of the month is good to be aware of. Some traders actually build strategies around the NFP releases. Just be careful with broker spreads and slippage around that time. But that being said, you could have used the momentum to ride off of this NFP release. Okay, and have entered the breakout of this resistance level here. To be fair, the market was starting to make lower highs as well. You can see here, sorry, higher lows. You can see here, higher low, higher low. So the signs were there of a potential reversal to the upside, which is exactly what we got. Okay, and that's how this trend all played out. Just giving you an example of how you could have hopped in earlier on with a move there that would be around 160 pips and counting at this moment. You could, of course, use a trailing stop below the lows, close part of the position if you want on the way up. Perhaps you may have exited around here when you've seen all of this consolidation. But nonetheless, it was a good trading opportunity. So going back to the high-low indicator, we're going to focus on where we are now. Okay, as I said, an uptrend. So we're only going to look for buy trades. Well, that I trade with the trend. You know, if you want to range trade, you can do that, or you can take reversal trades and look to sell right at the high or buy right at the low. But you can risk going against the tide if you do that. Instead, what I'll do is I can see the weekly high, which started here, okay, and then as this trend was approaching up to the weekly high, I would have waited for the breakout. As you can see from that candle there, quite a significant breakout candle, and this area here on that breakout would have been a good trade into this uptrend that had, it started, as I said, back here. This was a pullback, almost consolidation, but then we had a nice continuation from this point upwards here. Okay, you've got your 3 white soldiers candlestick pattern. They're actually following 3 black crows. You've got your 3 inside up candlestick formation there, which is basically a bearish candle followed by a bullish candle, which is at least 50% of the bearish candle's body, followed by another bullish candle there that breaks above the high of the initial bearish candle. So it's a strong buy-in signal around here. Okay. And then we had a pullback up here. Okay. Which gave us an opportunity on this weekly high to start to wait for a breakout there of the weekly high. Okay. And to be honest, I don't always, well, one good thing about this weekly high is you can see, if I draw it, it coincides with this resistance over here. Okay, and that's because it's the previous weekly high, which is including this data here. Okay, so basically what it's really doing is showing you the resistance from the previous week or the support from the previous week. Okay, so we have the high there of the previous week and the low there. And I think this does teach good principles because it helps you to spot the support and resistance levels that are vital. For example, if I wasn't using the indicator there myself, I would have drawn that as a resistance level and I'd be watching for the breakout there, especially on an uptrend like this. Okay, if you didn't enter on this pullback down here, but that's a more aggressive entry. Okay, but certainly what you wouldn't have done is bought at these tops here. You would have waited for the resistance to form. It's been tested, and then 1, 2, 3, at least 4 times, and then fifth is a breakout, which coincides nicely. As I said, it is the weekly high, so the weekly high is obviously more significant than, let's say, the daily high. Okay, price does approach the daily high around here, and it is a breakout, and it does become the previous daily high, then becomes support as well. Need to keep in mind that the daily high will be different depending on the broker you're using and their time zone. Okay, so maybe in different positions for different traders, whether your broker is on Eastern time, GMT, CET and Central European time. So the lines can be in different places. So that's why I personally don't think anything beats manually drawing your support and resistance lines, because that's more or less what this indicator is for, the high and the low, aka support and resistance for a given time period. And also I don't like to be constrained by time periods, if you know what I mean. I don't have to say, oh, I'll only go by the weekly high, or I'll only go by the daily high or the monthly high. No, I'll just go by whatever support and resistance I see on the chart. Okay, and it's not always going to be horizontal. As you can see from here, this for me is a level of support now, and or you can call it a trend line because it's been here and here, and I'm sure when price comes back to this line around here, something else will happen, whether that's a bounce and a continuation or breakout into the opposite direction. Okay, but that being said, if we get back to the indicator, so one way I would trade is I first establish the trend direction, which is up in this instance, and then wait for a breakout of a significant level such as the weekly high here. And I'd want to just verify, perhaps there's candlestick patterns around for confirmation, but definitely at least resistance in an uptrend or support in a downtrend. Okay, so that's the previous weekly high. If we look for a downtrend, let's have a look. What do we have? Let's load the. This is a pound dollar chart. Okay, so same principle. You can see the market making these lower highs. We'll be looking to sell in a market such as this one. Lower highs again. I can see sell opportunities, a nice wedge pattern, and you can see from that breakout, it's a big breakout candle to the downside. Traders were watching this play out. They've seen this nice downwards move. This nice downwards move here and a pullback consolidation, and could have entered a breakout on that pullback. Whether you entered there, okay, as I said, drawing the line, not always horizontal, not always straight, or you just waited there for the breakout here. But you probably definitely wouldn't have sold at the bottom of that candle, just waited for a few pullbacks and then a breakout then. But as I said, I'd prefer personally to be drawing my lines like so. Okay, arguably back as far back as here. Okay, and then that support, it's a nice breakout to the downside, and we could have entered there. And as you can see, I've completely ignored the high-low indicator. It's just force of habits. I mean, I find that if you learn one thing from this video, it's just that you don't always need to rely on technical indicators. Okay, you can just manually draw trend lines of support and resistance on your chart and just know some candlestick patterns. And I think that, that can put you, at an advantage. And then if you've got sensible money management, I like to cut losing trades short and let winning trades run. You can create a profitable trading strategy. You don't need no crystal ball indicator, no unicorn magic or any of this nonsense. You can just use pure price action trading. Be disciplined, don't revenge trade, don't trade out of fear, anger, greed, don't have FOMO, fear of missing out, don't force trades that aren't there, don't stress yourself out. Again, another advantage to the higher chart time frames, less time chart watching, and more time catching big moves. Okay, so if I did take this breakout trade here, my stop loss would have been just above this high here. Okay, so that would have been what, 15 pips, relatively tight, especially for the 1 hour chart time frame. And this trade with a potential of over 120 pips. Okay, so with a 15 pip stop loss, even if we get it wrong 3, 4, even 5 times in a row, but then we capture a big move for a few hundred pips, we're going to be up overall. Okay. And we can, when you do get moves like this, what I wouldn't do is I wouldn't just exit after I've seen, get excited. Oh, two big candles, 30 pips, 2-to-1 risk to reward ratio. Let me take all that profit off the table. Fantastic. No, you've then left over 100 pips on the table. Okay. Instead, we can move our stop loss to break even, or at least break even, and then trail the stop loss above the highs on the way down. So as price falls, down, you can just put the stop loss above the recent high there. Okay, maybe even here. Okay, you might even want to use the high and low indicator to help you decide where to put your levels, your stop loss. Okay, but as you can see, this trade was nothing to do with that indicator. If we were trading only this indicator, we would have, around here we could say, okay, the previously weekly low is here. Okay, which to be fair is that support level all the way back there, and is actually a nice breakout trade. You can see that it formed a good support level because it is the weekly. So you could have traded the breakout of that, pull back, and then this almost became a resistance level, support become resistance level here. However, if we sold on that weekly low, look what we're selling at the bottom of that move there. You wouldn't sell at the low like that, would you? You'd want to be in around here. Okay. And you could have done that by trading the previous daily low, breakout of that. Or, as I like to do, just manually draw your support level. Don't be lazy. Look, downwards trend, okay? Support level formed, pullback, okay? Market is still making lower highs, so we're still on that downtrend. Enter on the breakout there, and that's what a lot of traders did, as you can see from this momentum. Okay, you don't need to wait for an indicator to tell you you can only enter when I say, But I do understand that traders like to rely on indicators, and that's fine. You can do that. In this instance, I'd just be using it as a rough guide. I do think it's good to perhaps help you identify longer term levels that you might not be aware of, like this monthly low here, for example. Okay, we may be wary about watching price around this level because it can be a significant level of support. Okay, the monthly low. So you can see the price does break out from it. Then it's actually tested 2 times more, and then price, it holds up well as support come resistance, and price falls down. Okay, so that does show the significance of the monthly line. Okay, so I can see how this indicator would be useful to have on your chart. It's just be careful it doesn't get in the way of the more immediate price action that's going on. And as I said, be aware of your candlestick patterns as well. I've got a nice inside bar there, bearish to the downside. Lots of bearish price action around here, suggesting that this, downward trend was going to continue. And there's ample opportunity for you to bank some pips. Okay, so well, hopefully you've discovered a way in which you can use the high-low indicator within your trading. As I said, most important for me is time and entry. I'm going to trade in line with the overall trend, whether that's something you identify with drawing trend lines yourself, or of course you can use indicators like the moving average. If you just put the moving average on the chart, you can just look for sell trades when price is below the moving average, or buy trades when it's above, whether that's a 14 period or more longer term 50 period moving average. I just find that trading in a direction of the trend makes life a lot more easier, and we can capture some big moves. Okay. But you don't necessarily need a moving average. I mean, that line there that we drew to show us the lower highs is telling us there's a downtrend. That moving average can lag sometimes. It might be a bit late. For example, back here, you can see this move had already started to the upside. It wasn't until around this point the MA picked up. But that being said, if we were using 14 periods, it would have reacted slightly quicker. Okay. But yeah. So trade in the direction of the trend, breakouts of the for me personally, the weekly low, just because it's got more data, but I still be aware of the, or even the monthly low, breakout the monthly low. I just be aware of the more recent support and resistance, which you can base off the daily high and daily low. But I don't think anything beats just manually drawing your support and resistance and trading a breakout, so those on pullbacks into trends, vice versa for long. Okay, hopefully you found something useful in this video. If you can like and subscribe, that'd be great and really help my channel. I do thank you for watching. Take care, and I will catch you on the next one.